Everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 14th of January, 2023. And this is the weekly technical analysis for the Euro, the Cable, and the Aussie dollar for the third week of January for this new year. And let's begin with Euro, but just a quick look across all the major pairs. You have seen that you'll see that all have pushed up higher due to the trigger on Thursday, which was the US CPI trigger, which met expectation with just a gradual decline now year on year from for inflation down to 6.5%. So it met expectations where analysts expected it to slow down as well. All the way, this is the 6 month of decline from August last year, all the way from above 9%. So this is overall good news for the economy, and also they hope that this will sway the Federal Reserve to slow down their rate of increase for interest rates. And the next meeting coming up on the 1st of February, that it could slow down to 0.5% or 25 basis points from the last increase in December was 0.5%. And we'll see if they will actually slow it down and then maybe take a pause and to view more data as it progresses every month. Okay, let's go into the Euro. And in fact, right from the start of the week on the Monday, it has already broken through the swing high from the end of the year in December, and punched through the intermediate resistance at the 107. And Thursday was the trigger that gave it a boost to break through to 108.60 area. And if we look on the weekly time frame, that was the breakout, and this was likely follow through of the bullish momentum from the previous week after bouncing off the 105 with a long wick, lower long wick candle here, and trying to target the 110, but I think you'll face some headwinds at around the 109 area, just above 109. So it is already punched through this resistance level at the 107.60 area, and now trying to likely target this swing high. And this is at the of this doji, this is at 109.36. So let's mark this one here. 109.36 here. Let's go back to the daily time frame, and we'll see that from this daily swing high here. And in fact, we could even extend before that. That was from this area. Okay. This 107 is going to serve as an interim support now. In fact, we can actually update some of these pips and instead of using this long one from the end of last year, we can actually move this to a shorter time frame to this recent swing from a couple of weeks ago. And that was at this swing high at the 105, just below 105, and that's where it pulled back to retest and bounced off from. So that's at the 104.83, and the swing high here 104.81. And we look at the extension, that was the previous resistance at the 138 fib. So yes, just around the 107.68 level. And the 162 is just above that that swing low, swing high that we identified, and that's at the 109.45 area here. But let's mark this now as support. And there's another interim support here at the 107. Let's move this here and move this strong support at the 105 at this swing high. Okay. So this week there's no major news from the Eurozone, and also no major news from the US as well. And also the US has a holiday on the Monday. Okay, so on the daily, you'll see this strong support coming out with this crossing of the 55 EMA over the 200, showing a change of trend here. So that will definitely provide a strong support zone. Let's check the weekly here again. And yes, we should mark this one here as a significant resistance up here. Okay. All right, so let's compare with the US dollar index, the DXY, and you would likely expect that the US dollar has taken a plunge with the CPI news. And here's the DXY, US dollar index. And as an inverse correlation, it did drop lower right from the start of the week on Monday, and drop below a key support level at a 103, and then pause for a couple of days and waiting for the CPI news on Thursday, and that was another plunge lower. So it has definitely weakened. Even right from the start of the week, it had already gapped lower. So traders were already expecting a lower move. And if we take a look on the weekly time frame, it is a very bearish week, and it's trying to target that swing low level that we identified last week, just at the 101 round figure. and it could try to extend lower to try to reach 100 round figure. There's a strong support there. Just at a psychological level. So we could, there are a number of options to draw the Fibonacci levels. But all of them will try to target this area just above 100. But for now, let's so even if you move this swing low to here, you'll see the 138 fib at the 131. This one here was at 100 point, say around 10 or 11. We go down to this swing low, and that's above, just above the 101. But if we take the most recent swing lower, the last couple of weeks, just like the euro, then it lines with the 162 fib, exactly at the 100 round figure. So this potentially could be, could use this as the current fib, and you can see the 55 EMA sloping down and trying to cross the daily 200 EMA here. So that is likely to be already a delayed indication of a trend change. So let's mark this level as a strong support. It's already at the 105. This area now is going to be 103, is at resistance as well. And we have another we'll say interim support at the 101. And then a major support at the 100 round figure. Okay. And for the week, yeah, we just want to check this again, and yeah, it's trying to reach the 101 level. Then we'll see when it will try to test the 100. Maybe just a matter of time with the FOMC coming up 1st of February. All right. So not looking good for the US dollar. Yeah, it's likely time for it to swing back down and retrace its very bullish move from last year. We can also just check the where we are on the longer term time frame, and it's close past the 62 fib retracement level already for the move from last year, and 78.6 is coming up at the 98, just below 99 level. So if it gets that far, so that's just a reference check. But yes, it has already retraced past the 62 fib level. Okay, let's move back to the other major pairs. Let's move on to pound sterling. to the cable, where it has also broken through the resistance at the daily 200 EMA. And then on Thursday, there was follow through, but just a muted pause on the Friday. So let's also take a look on the weekly time frame, and that's trying to bounce back up towards the weekly 55 EMA. It's at 122.80. And it did dip down to and bounce off from the 120 support. That was a round figure. And the previous week, it did dip to the 38 pip retracement of this swing move for the last part of the year. And we could change some of the fibs, but we can leave this for now. And we'll see how far it's going to go, whether it's going to go all the way to retest the last year's swing high. It's at 124.46. That's the major resistance up here. So this level here is now going to be an interim support. And we can also remove this one here at the 55th. This will now shift up to the 38th retracement where it bounced off. And this is now a major support zone. And this week there's only UK CPI news, and that's higher than the US. That's still running at 10.5% year on year. And we'll see how this figure will sway the Bank of England, where they also have their meeting on 2nd of February, just after the FOMC. And likewise, the ECB also. It's also 2nd of February. Now, if we take a look on the structure here, there's potential resistance up here. Previous swing high. And this was at 123.44. So that's another interim resistance. Okay. And that's about still another 110 pips away. But it could pose some resistance. We may not get all the way to the swing high at the 124.46. Okay. Let's move on to the Aussie dollar. And likewise, Aussie dollar has also pushed up higher past the 200 pip of this reversal move that we did last year. And heading towards the key round figure at 70. So easily brushing through this intermediate resistance zone, which we should have marked this as a key resistance, psychological round figure. And if we draw this upper trend line carefully, and yes, we'll see that this will also provide some resistance. Okay, and we could also adjust the fib for this one here, where yes, we could see this couple weeks swing move as well, same as the other pairs, and that swing high aligned with the 68 round figure. That's at the 100 fib, and now it has alignment as well to the 70 round figure at the 138 fib. If it does try to push up higher, the next target is at the 162 fib at 71.22. But I think there's going to be some reaction at this key resistance at 70. So we can move this support zone to the swing high. All right, and yeah, there's also a strong support area at the 67 round figure, but we'll leave this swing, this support here. Let's take a look on the weekly time frame, and easily brushing through the 55 EMA on the weekly time frame, and almost reached the 70 round figure, hit a high of 69.94. And this week there's a jobs report, no other major news. All right, we can move this lower trend line out of the way. All right. So it will be a technical move next week. We'll see, because there's no major fundamental news coming out. Let's see what the price action is going to be, especially with the US dollar. Whether it's going to weaken further. If it does, then these resistance zones are in danger. But for now, the Aussie seems to be, yeah, seems to have reached their resistance areas, although this next swing high area is also does align with the 162 fib extension area. Okay. All right. So do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.